Hey guys, Bill Soriano here from Pittsburgh. It's Saturday, April 26th. This is going to be the weekly recap for my damn near 100% objective 4 hour supply and demand zone trade plan. Right? This is the weekly recap for this week, the week starting April 20th, right? Starting Sunday, April 20th. So right now it's Saturday, April 26th. Let me just share my screen here with you guys. So wasn't a whole lot this week. There was only one trade that I was able to take. I have a pending order in right here, as you could see. This one trade was in EURUSD. This is my demo account, guys. This is not a live account. It's not a funded trading account. It's not a challenge account. It's just a demo account. It's a $100,000 demo account that I started with, and that's why the trades are, so large. So and in profit so much, right? So this was up actually almost 1% at one point. Again, we don't do anything until if you look at our 4 hour supply and demand zone trade plan here, we did update this. I did update this a little bit here. By the way, guys, these are links to the videos here. This is the first video right here. You have to click on that to get to the YouTube video, and you have to click on this to get to the second one. Now, trade management we put in here. We set our stop loss at the top of the 4 hour supply zone or the bottom of the 4 hour demand zone. We use the next supplier demand zone to take profit. If there's no supplier demand zone present, then use next higher low instead. Once you are up in the trade by 2%, you do nothing at all until you're up by 2%. Okay. Once you're up by 2%, you sell half that position and you will move your stop loss to at least break even. Okay. Then as the pair moves in the direction you want it to move and you start making new highs or new lows, then you're going to trail that stop and you're going to stay into that trade until one of three things happen. Either you get stopped out at your new stop loss, which is in profit, obviously. You hit your take profit target, right? Or you have a total gain on your trade of at least 3%. Okay. So if you have a $100,000 trading account, you're risking $1,000 to try to make, whatever you can make, say 3,000. That's a 1-to-3 risk to reward ratio trade. So if you exited half your position, you made $1,000 profit, and you're currently up $2,000 on your trade, then you have a total gain of 3%. You can exit that point. You can just exit the trade at that point. Okay. So that's our trade management rules, and I did just put that in there last week. Okay, so let's look at this. We see right now we're up about 1/2 or 1/3 of 1%. It's up about $332.52. And we'll have to see how this pans out this week here, right? You could see here that I took the trade right here on this candle. So I didn't have a limit order set on this trade. I actually did a buy stop order. So price was already below the 71. So I waited for it to come back to the 71 to get in. So I actually entered this trade on a buy stop order. Okay. So that's a little bit different, but that's because I didn't have a limit order set at the 71. And so price was now below the 71. So I wanted to wait for it to get back to the 71 to give myself a better chance of winning this trade. So let me show you what this looks like here. There's only a couple pairs I want to show you today here. So let me see if I can get through this very quickly here. So this is on the 4 hour time frame here, and I'm just going to right now, remove all the drawings here. Okay. Okay, and then what we're going to do is we have to replay this back. And again, we're on the 4 hour time frame here, right? 4 hour time frame. That's what this is. This is 4 hour supply and demand zone trade plan, right? Damn near 100% objective. That's because we use a couple indicators to help us with this. They don't tell us to take trades, but they help us to determine the trend bias and also determine where is the best supplier demand zone to trade from, and then they help us to decide to when to take the trade once our zone is hit. Sorry about that. Wrong place here. Okay, so right here, turn on our indicators here. So let's just replay this back to here, right? Okay, so right there, as price makes that new high here, we get this, the indicator gives us this demand zone right here. So that was the demand zone, right? We set our alert right there, and then we wanted to wait for price to come back to that. Okay, you could see there, and I just can't get this thing stopped, you know? I just can't control this replay mode for some reason. I'm clicking in the wrong place. Anyway, right here, you can see the price comes into our zone and it goes down below the zone to attempt to invalidate it. But then you just get the wick, price closes up here above the zone. So now let's just put our line there. So we drop down to the 1 hour. And again, you have to watch the video here. I do have to update this video, guys. And it says here, video needs to be updated to reflect the 30-minute change of character. When you watch this video here, you want to learn how to find your first confirmation that you could take the trade. And that's going to be the buy or sell shift, right, on the 1 hour time frame. That's the first confirmation, right? Once price hits 4 hours prior to demand zone, drop down to the 1 hour, wait for an impulse candle that creates a bell buy or sell shift, and you get that using the 5 and the 13 EMA. Okay. Now, once you get that buy or sell shift, now you drop down to the 30-minute and wait for a change of character market shift. Okay. And the indicator will tell you this as well. Okay. So those are your two confirmations. So price hits your 4 hour zone, you drop down to the 1 hour, you wait for the buy or sell shift. Once you get the buy or sell shift, you drop down to the 30-minute and see if you have a change of character. We were waiting for the change of character on the 1 hour, which is what this video shows, but it was taking a little bit too long and I was missing a lot of trades. So we changed that to 30 minutes. Once you have both those confirmations, you have the buy or sell shift on the 1 hour, you have the change of character or the choke, as we call it, on 30-minute. Now you can draw your fib retracement, right? You can wait to draw the fib retracement until price starts to pull back, or you could just draw it and then you just have to keep changing it. If price continues in the direction it was going, you have to adjust the fib tool, right? The fib zone. But then once you do get that pullback, then once you get a retracement to the 38.2, that's when it's safe to set a buy or sell limit order at the 61.8 or the 71. We're going to change this to the 71 in the new video. We're just going to wait for the 71 to get hit, and that's it. Okay? So that's what the new one is going to show. So right here, we're going to drop down to the 1 hour, and we're going to wait for that yellow EMA, which is the 5, to cross and close above that red one, which is the 13. Now, it's kind of hard to see here, but you could set it alerts here. Over here, though, you could see the values. See how you have this DeLorean EMA, you could see the values there, you could see the yellow one and the red one. And so you could look over there and you can see that here, no, right here, the yellow crosses and closes above the red. Okay? So when that happens, now you're going to, that was right there. We're going to drop down to the 30-minute. Do we have a change of character? Okay, well, look right here. The indicator gives us a change of character. We had this move up, this pullback, price went higher. We have our change of character. So that what that tells us now that it's safe to draw our fib. So best to draw the fib on the 1 hour. And at the time that this happens, right, this is the low, and that's the high. So we're waiting for price to come back to the 71. Now, the question is, let's just shut this off for a second here. So the question is, where are you going to set your stop loss? Okay, so since you have this wick, you know that you have to go down below this wick. But now, since your area is outside of your demand zone, you don't really know what's going to happen. Okay, so you could decide to go all the way down to the next low here, which is what I think I did, or you could just decide to give yourself a little bit of breathing room below that wick. Okay, we're going to do it both ways here. Now we go back to the 4 hour and we want to see where are we going to take, where, if we enter this trade here on the 71, right? See where the 71's at. Now again, I wasn't able to do this. I didn't set a limit order at 71, but I still got in at the 71 because I set a buy stop order. Okay. Okay, so let's say we're going to set our stop loss. We're going to go down below this low a little bit here. In either event, if we use the low here, you could see that we did not get stopped out, but it came very close. Okay. And our take profit goes at this supply zone up here, right? So if we're buying from a demand zone. We're going to use the next supply zone for our take profit. If we're selling from a supply zone. So we're going to use the next demand zone on the 4 hour time frame for our take profit. This is always done on the 4 hour. That's a 1 to 3.84% trade. Okay. So when you see something like that, you could say, well, you know what? I could actually take this all the way down to this low here, right? And I still have a 1 to 2.32. Okay. This is where a little bit of subjectivity comes in, right? We call this the damn near 100% 4 hour supply and demand zone trade plan, but it's not 100% because this is where a little bit of subjectivity comes in, right? You can't use the demand zone here for your stop loss because this wick already went through. So that's where you have to use your discretion as to, do I just use that wick? Do I go a little bit below that wick? Or do I go all the way over to here? And since you have to have a minimum 1 to 2 risk to reward on the trade, you can actually go all the way to here and still take this trade, right? So this is the trade that I took. And you could see here price moved up like it said. I think I had my stop loss a little bit, somewhere down below here. Right. Again, you always use the 1 hour to draw the fib. That fib was a little bit low there for some reason. Right. So you could see that even if you do use that wick, you don't get stopped out, but it comes kind of close. And so that's why we took this trade. Now, again, I didn't have the buy limit set here at the 71. When I came to the trade, if I drop down to the 1 hour here, it was already below there. So what did I do? In order to give myself a little more confirmation, I set a buy stop order and I waited for price to come back and touch the 71. Because this way, if it would have just kept going down, I never got in the trade. Okay. But that's not always going to happen for you because, again, 90% of the time, you're going to have that limit order set. So you're already going to be in the trade. Okay. So that was EURUSD. That was the only trade that we were able to take. We do have a pending order in though for GBP-CAD. So let me show you this one. Let me show you how this one's set up. And it's probably the last one I'm going to show you. So again, guys, when you look at my trading view, again, what are these flags? The red flag means that we've been able to determine that the 4 hour trend bias is bearish. Okay. The blue flag means we've been able to determine the 4-hour trend bias is bullish, right? Blue is bullish, red is bearish. If the pair has no flags, that means we couldn't determine the trend, and we have no, or we were able to determine the trend, but the supplier demand zone was just too far away, and price would have had to drop above or below the 800 EMA to get there by too much. Okay, if it's close, it's okay. Too much is too much. So if there's no flag, then we're not trading that pair this week. We don't have any alert set for that pair. Okay. Now, once price hits our 4-hour zone, we give it a yellow flag. Once we get our confirmations, right, the 1-hour buy or sell shift and the 30-minute change of character, then we're able to look at setting a limit order, and those get a green flag. Then if a trade, either I took a trade or a trade presented itself, I just wasn't able to take it, those are the purple ones. Okay. And this one here should not even be flagged. This was a purple one in EURUSD. If I have time, I will show you that trade as well. So GBP CAD, let me show you this one. Again, let's go down to the 4-hour and let's just kind of get all the drawings off of there, right? Let's get rid of, okay. Okay, so what do we see here? We see right here, we have price making a new high on the 4-hour time frame, right? Of course, we have the 50, which is the aqua above the 200, and of course, price is above the 800, which is the blue. Okay, so if price is above the 800 and the 50 is above the 200, our trend bias is bullish. If price is below the 800 and the 50 is below the 200, our trend bias is bearish. Okay. So here we have price coming down, and we have our alert set. We highlighted this zone here. We put our alert at the beginning of the zone. So right here on this wick, our alert gets hit. So let's just put our line right there. We drop down to the 1-hour. What are we looking for? We're looking for a buy, or we're looking for a buy shift because we're trying to buy this. So we want to wait for this yellow line to cross and close above this red line. And right there, the values were even. If you look over to the left here, you can see values. On this candle right here, they were even. So we're not going to use that. We're going to go to this one. So here we got our first confirmation. That is our buy shift. Now we're going to drop down to the 30-minute, see if we get a change of character. Okay. Right here on this candle, you can see we did get a change of character right here. And then price moves higher right here. So that kind of confirms that change of character that happened back there. Right? So now what this means is we can now go to the 1-hour. This is our change of character. We go back to the 1-hour, and now we can draw our fib. Okay, so our low is right here. High was right there. Okay, price starts to retrace here. Right here, we could have set our buy limit order down here, right? Price never hits it. Now we get a new high. So what do we have to do? Since we have a new high, we now have to move our fib up to there. Okay, and now price retraces to the 38.2, so we can set our buy limit order right here at the 71, right? And as you can see here, it never comes down there to it. But let's just see what this trade would look like. So we go back to the 4-hour because we always use the 4-hour structure to determine our stop loss and our take profit. Otherwise, you're going to get stopped out of trades. If you try to use the 1 hour or 30-minute time frame, you're going to get stopped out of trades that you shouldn't get stopped out of. Okay. So here's the 4 hour time frame. This is the 71 here. Now, interestingly enough, price hits the 71 here on 4 hour because once in a while, you're going to get a different high on the 4 hour than what you get on the 1 hour. So this would look like this here on the 4 hour, right? But that doesn't matter because we draw the fib on the 1 hour, right? So this was our low and this was our high. Okay, and we see here that price does not hit the 71 on the 1 hour time frame. Okay, now on the 4 hour, it looks like it did. In any event, if we do decide to get in this trade, we're going to set our buy limit right there. Our stop loss goes down right down below this demand zone because it was not violated. There's no attempt to invalidate it. Our take profit goes all the way up there at the next supply zone, and that's a 1 to 2.63 risk to reward trade. Okay, so that is a valid trade to take. Okay, so that's why we have this. That's why we have this pending order right here, and we're going to leave that pending order in there over the weekend and see if it executes next week. Okay. Now, if price would move higher on the 1 hour, then we would have to change it. I'm sorry, I'm on the wrong pair here. Okay, this is what our trade looks like here. Again, there's the high, and that's what we're looking at. Now, if you look at this on the 4 hour time frame here, right, it looks like the 71 got hit because there's a different high on the 4 hour. Okay. So this is where things get a little confusing because 99 times out of 10 or 8 times out of 10, when you draw your fib on the 1 hour from the low to the high, it's going to pretty much be the same on the 4 hour. In this case, it's not because the candles were they just formed differently on the 4 hour time zone, right? And the 1 hour didn't reflect that because price made new highs and then always dropped down. Okay. So the 1 hour, when it closed on the 1 hour, price was always lower for whatever reason. Okay. So you could see here, if we were to draw this fib on the 4 hour, well, this would go all the way up to here, right? But price would have still come back to the 71 and we could have been in this trade. But we don't use the 4 hour to execute the trade. We use the 1 hour. Okay. So that, like I said, 8 times out of 10, when you draw your fib on the 1 hour time frame, right? Prices hit your 4 hour zone. You get your 1 hour confirmation, which is the buy or sell shift. You drop to the 30-minute. You get your change of character on the 30-minute. Now, you go back to the 1 hour to draw your fib because you actually enter your trade off of the 1 hour structure. However, you use the 4 hour structure for what? to determine your stop loss and your take profit. Okay, so it gets a little bit confusing sometimes, but like I said, 8 or 9 times out of 10, when you draw your fib on the 1 hour from a high to the low or the low to the high, it's going to be pretty much the same on the 4 hour. But in this case here, it wasn't. So it looks like you should have gotten this trade based off the 4 hour structure, but we don't use the 4 hour structure to enter the trade. We use the 1 hour structure. The 4 hour structure is to determine the trend. It's to determine which supplier demand zone to trade from, and it's to determine our stop loss and our take profit. So a little bit confusing, but we're not in this trade because of that. Okay, let's look at one more here. This one was a little trickier, EURCAD. And you can see here on my chart that I have what? I have sell half the position right here. In profit, move stop loss to break even. So you make 1% on half of the position, and then you get stopped out of break even on the other half. So let me show you what this looks like here. And this will be the last one I do, guys. So we're on the 4 hour time frame. We have to pull this back here a little bit to show you where the demand zone was at. Okay, you can see price moved higher. What? We have the 50 way above the 200. Price is way above the 800, which is all the way down there. So we know we're very, very bullish. Okay, so we have a new break of structure. We have this, the indicator gives us this supply zone right here. I'm sorry, this demand zone to trade from. So let's just highlight that. Because when price goes through these zones, they disappear. But that doesn't mean they're invalid. That's why we have to highlight. Okay, so now let's just see what happens here. Boom. Price goes down through the zone. So what happens? It invalidates that zone as far as the indicator is concerned, but not as far as I'm concerned. So that's why I highlight the zone so I could still see it. Okay, price goes through. What are we waiting for? Now we need to what? We need to drop down to the 1 hour, and we need to get a buy shift, which we get right here. Okay, you can see that yellow EMA definitely crosses and closes above the red one. And now we're going to drop down to the 30-minute. Do we have a change of character? Well, no. The indicator is not showing us any change of character. There's no choke on here. So now we need to wait for that change of character on the 30-minute time frame. So let's see what happens here. This is our second confirmation. Oh, okay. Right here, it says we get a change of character. In this case, however, guys, again, this is a 100% damn near objective trading plan. This is where it gets a little subjective because this candle should actually close above that, not just the wick. And this candle here does, right? And so that's where you could actually say you do have a change of character. But I really don't like that candle because it's very indecisive. You have wicks to both sides of it. But you do, in fact, get a close above that line there, which gives you an actual change of character, right? So let's go back to the 1 hour. Let's say, okay, if we were going to draw our fib, right, we would draw it from here to here, and then we would wait for price to come back to the 71. Okay, now, let me just shut this off for a second. Let's just look at this one more time. I just showed you what I was looking at in real time, but let me just show you this again. Here's our candle, right? Let me just get rid of this. Here's our candle that hits our zone. Drop down to the 1 hour, right? Right here, we get that buy shift. We drop down to the 30-minute. Right? And we actually got the change of character that I like right there. Okay. Now we go back to the 1 hour. We draw our fib right from there to there. Okay. Then we can get in this trade at the 71, right? So we're going to put this at the 71. That's the wrong tool. I need to buy. Put it to 71. Then we're going to go up to the 4 hour, right? What do we know here on the 4 hour? Well, again, we have a wick that comes down through a zone. Okay. So we have to go below that wick and we have to go a little bit below that wick like that. Okay. The other thing we could do is we could use this low right here. That's too high. So we would have to come all the way down to this low here. So for this case here, let's just use that wick, right? And then we don't have a supply zone because price is at new highs. Okay. So when you don't have a supply zone, you just use the last high right there. Okay. So this is set up as like a 1 to 7.13 trade, right? So again, I think even if you put this a little bit lower, even if you go down to this low here, right? As price moves up here, right here, you actually acquire a 1 to 2, you acquire 2% gain. So what does our supply and demand zone say here? Our trading plan, right? Once you're up in a trade by 2%, sell half the position, move the stop loss to break even. So in this particular case right here, you would sell half that position, right? So if you're risking 1% to get 2%, you're up 1%, you're up 2%, you sell half of it, that's a 1% gain, right? Because you only sold half, not the whole thing. So you get a 1% gain, you move your stop loss to break even, and then what happens is we kind of get stopped out of break even right here. Okay, so we would be out of this trade, but we did get a 1% profit because once it was up by 2%, we sold half the position, which gives us a 1% profit. Okay, guys, so again, this was the weekly recap, and I went a little long there. I'm sorry about that for the week beginning April 20th. This is the PDF that you need. This is my 100% damn near objective, damn near 100% objective 4-hour supply and demand zone trade plan. If you don't have it, make sure you ask me for it or click the link below this video for it. Again, there's 2 videos to watch. This one right here, click on this image, then click on this image here. And just remember that on this one, the 1-hour entry model, we did add that second confirmation, which is the change of character on the 30-minute. And that is in the description here. Okay, guys. And again, this is my trade plan. It's free for you, but it does take some time to actually mark up your charts every day, right? About 30 minutes a day, mark up your supply and demand zones, check for your buy or sell shifts, check for your change of character, set your limit orders, right? Get in your trades, manage your trades. If you're looking for something that's done for you, also, since it's a 4-hour structure trade plan, you don't get a whole lot of trades every week, right? So if you're looking for more trades, you like to scalp, you like to trade on 15, 5 to 1 minute even, or if you just want someone else to send you the trade ideas right to your phone, then you can join our community. And these videos are right here. Click on this link, click on this image to watch this about having our expert trainers and expert educators send you trade ideas right to an app on your phone. Watch this video to see everything you'll get, right? And then click this video here for more updates on my channel so that you can see, if you're watching this and it's, May, June, or July, or even next year, maybe 2026, you can click this link here to get my newest weekly recaps like this one. Have a great day, guys.